All right, guys. So here is the part two in regards to the liquidity pool series that I'm going to go ahead and make. Now, if you guys haven't checked it out, I'm going to include in the link in the description of part one of this video. And again, this is in order for me to go ahead and continue on from those prior concepts where we talked about liquidity pool raids, the very basics, and now we're going to build on it. And I'm going to reference one of the most important parts when it comes to liquidity that so many ICT traders do not have when it comes to their playbook. So I'm going to go ahead and I'm just going to reveal the two major components. And at the end of the video, I'm going to go ahead and I'm going to reference and at the end of the video, I'm going to go ahead and give you guys an exact strategy that you can use, whether you use on the lower time frame, higher time frame. It's all fractal. So without further ado, let's go ahead and let's get straight into the video. Now again, guys, we talked about it, right? So we spoke about liquidity pool raids being taken in the prior video. And now the goal for me is to add to that. Now, liquidity being taken is only one part of the equation. I'm going to go ahead and show you guys in the next slide a very common thing that most people always ask when it comes to liquidity pool rates. So another part of it is also something that many traders don't incorporate. So we're going to go ahead and we're going to fill that gap in this video. Now, how many times have you guys been in this situation where price obviously have a swing low, we have an impulse push up, and then we have a drop lower? How many times do you kind of ask yourself, hey, is this going to be a raid where price pushes higher and takes out the high? Or is this going to be a scenario where this is essentially just an impulse push up before we make a new low? So many people wonder whether or not this is going to be a raid on sell stops or whether it's going to have an impulse move up and then push down. So we're going to go ahead and we're going to clarify the scenarios that give us likely situations to identify whether this is a raid or whether this is going to be a potential retracement before a move lower. Now, the key to liquidity. There's going to be two major components of liquidity, which are going to be the following: identifying a rate at a key level during a key time window. So if we're coming into a daily level like a fair value gap, if we're coming into maybe a weekly order block, and then we kind of pair it on the lower time frame where there's a specific entry model that we're looking for during, let's say, the London Open or the New York Open. Those are scenarios where I love to look for trades. Now, also, number two, and I think this is one of the most important parts of it, and I would argue this is potentially even more important than maybe one. Obviously, it's 1A, 1B for me, but identifying the opposing end of the range, meaning is the market engineering liquidity? You have to identify when the market is potentially engineering liquidity, because if it takes liquidity from one side, it has to pair orders on the opposing side. And I'm going to show you guys examples as we move forward. Now, adding these two factors to any liquidity rate setup, it's going to drastically improve the quality of trades someone takes. So again, this is just to give us higher probabilities in our liquidity pool setups. And that way we just don't take any new high or any new low, and we just think that's going to automatically be a rate. Now, again, if you guys want these PDFs, I'm going to have it here on the tradeandtrade.net. The link is in the description below. I'm going to upload these PDFs inside the free section so that way you guys can go ahead, have access to it as you like if you want to go ahead and break it down. Also, make sure to join the Telegram chat because I do a lot of other educational videos I don't have on YouTube, and all updates throughout the trading week of potential scenarios using these exact concepts. But first, all right, let's go over one major concept. And I've talked about this in prior videos. I've talked about this on social media. We have to be able to identify liquidity being engineered by identifying if we're in a LR, which is a low resistance liquidity run, or a high resistance liquidity run. So I'm going to just go ahead straight to it on what these exactly mean. So a high resistance liquidity run. If we have a scenario like this, right? Let's just say the price has an impulse push down, we create a specific low, price has a significant move away, we're on a retracement, and then price makes a new low. Let's just assume that this is a potential low that we're looking for. Hey, you know what? We want to clear this high. If there's let's just say an order block from that current range, which typically might happen, and maybe we even have a fair value gap, that is going to be a high resistance signature. Now, why is that? It's because on the way to liquidity, there's a lot of roadblocks. There's going to be high resistance for the market to push up into this potential high because there's quote unquote resistance. There's a very strong level that might have price react, and then who knows, maybe it reacts lower and then finally pushes up. But typically, those scenarios, the market may kind of like chop in between before maybe eventually taking out that high if it's going to be a bullish scenario. So inversely, a low resistance liquidity run signature is when we have the liquidity being built up, and then once price, let's just say, takes that same low as this example, but obviously a little bit more further, what's going to happen is going to be an easier time for the market to take out liquidity because there might not be any real strong fair value gaps. There might not really be any order blocks. You see price might chop, and then we have an aggressive sell-off into a liquidity pool, and then we have displacement, and then we start to show bullish structure. It's easier for the market to go ahead and clean house because there's not that much resistance. Think of it, and I've had this example as well before. Think of like a soccer or football analogy. If your goal is to score on the opposing team, it's much easier to score when there's less defenders. If you're in a scenario where there's multiple defenders guarding the goal post, or let's just say in football, guarding the goal line, at the end of the day, it's going to be much more difficult to achieve that objective, similar to trading. So again, we want to focus on these low resistance liquidity run signatures because they give us these types of moves, like that oomph, where price just cleans house, easy run to liquidity. Now let's go ahead. I'm going to show you guys the signatures of both in price action. So look at this scenario. Price swept lows. It swept this low and it swept that prior low. Now imagine you're someone who's like, all right, this is going to be a raid, and let's just assume this was a daily time frame, and you're maybe looking for an order pairing where the market takes out a prior high. It's going to have a very difficult time because we have an order block that had a displacement move lower, which also created a fair value gap. And we see how price reacted here. And if we play this a little bit further, this specific chart actually ended up selling off. That's why we have to be able to identify key components, because even if you're bullish, right? Let's say you're bullish on this specific day in here, you have to identify where is there potential roadblocks so you understand how you can potentially manage your trade. Trade management is a completely separate thing, and I'll make a separate video if you guys want more in-depth trade management videos. Now, when we talk about a low resistance liquidity run, this is the type of signature I love to see, and this is the type of plays that I like to call out in the public telegram because it's you get these explosive moves. When I'm looking for trades, I'm looking for explosive moves like this. I'm not looking for trades where the market is kind of like choppy, like in these environments, And even theoretically, this right here is a low resistance liquidity run signature to the upside because this was a weekly high. And look at the bullish structure, fair value gaps being created, bullish momentum to clean house. And again, similar here. When price finally breaks down, look at how, initially when we kind of test these like little fair value gaps in here and this consolidation point, we kind of like, chop around a little bit, but look how once we start to break down, there's no real support. There's no real PD array for the market to struggle to clean house. Those are the signatures we look for in price. And for me specifically, I like to look for these on the hourly and the 4 hour, because if there's no significant levels, I know I can target maybe this imbalance in here, liquidity resting beneath these areas. And again, on the higher time frame, you get these big moves. These are big ranges, potential for 80, 100 pip moves. So now let's go. So obviously we covered that component of liquidity being engineered, where the market ultimately, let's just say, has a push up. It creates this type of liquidity where it creates a lot of equal lows, and it keeps everything kind of maintained. You don't really see a lot of liquidity pool raids before move up. So when we have liquidity being engineered, liquidity being taken, and we start to reverse on the opposite end of the curve, typically we're going to have these explosive moves lower. So the other key component was identifying a rate at a key level during a key time window. Key levels for me, again, let's define that, can be a daily or weekly fair value gap, raid on clear swing high or low. So let's just say we take out a key weekly high or low. Any PD array that pretty much resides inside of an OT. So it could be like an order block, it could be a breaker, it could be whatever the case may be. That we then look to enter on the lower time frame setup during London or in New York's kill zone. I personally prefer New York. I'll probably make a video on why I think New York is a little bit better of a kill zone relative to London. Now, I'm going to break down this GU example that went 100 pips, that was identified in the private group. And then again, you guys can go ahead and check the public telegram for those receipts. But again, it's all about liquidity being engineered on the lower time frame, and it's all about the time that price hits specific levels and being at a key level. When we combine everything, those two components, your liquidity pool setups will have way better chance of working. All right, so now let's go ahead and let's take a look at this example on the pound that we referred back to. So again, I always start on the higher time frame. So let's actually bring up the components of what we were looking for, right? Number one, we were obviously looking for key levels being hit during key time windows. And number two, liquidity being engineered. Okay, perfect. So liquidity being engineered on the opposing side of the market. So I'm going to clarify these two things. Again, guys, it's this simple. So let's go ahead and look at the key level here on the pound. So obviously, again, I like to start off on the daily time frame. What's the first thing that I personally see here? We have, obviously, this market had an impulse push up above these highs. Now, when I look for a market impulse, this obviously has a strong impulse push up, and now we're kind of relative to that range, that dealing range, and let's identify it with just, swing low, swing high. Inside of this current dealing range, typically when the market comes back into a discount, so a discount meaning pretty much anything below the 50% of the range. And I have this right here. So pretty much anything below 50% is essentially a discount, where the market likes to accumulate these positions at a discounted rate. So when we identify specific key levels, we want to identify them ideally below the 50% mark. And if I go ahead and put this and just have like the OTE, 62, the 70, is there any PD array inside of this overall framework? So I'm going to remove this. So obviously we know that GU was in a discount relative to this current range. Now, obviously, what's the first thing I can identify? We have this order block in here. I'm just pretty much doing the full range from those down close candles down to the low before the impulse push up. What's also interesting is what we have here. We have this fair value gap. This fair value gap right here is another section in price, and I'm going to identify it as well. Now, the key thing is, does price hit this specific level during a key time zone? And does it engineer liquidity as it hits this level so I can look to target something? Again, I identified this as well, where I identified, hey, right here during this key moment, I'm looking for a lower time frame confirmation, and then we have this fair value gap here on the daily time frame. So when we go further and we look on the hourly time frame, I'm going to bring back these two components as well, so that way we can keep these as a reference. Look what we have here, and I'm going to go ahead and identify the day text indicator, and let me actually remove this grid so it's a little bit more clear as well. Okay, perfect, beautiful. So what do we have here? We have Monday's range where price is consolidating. In here, we have consolidation, and then on Tuesday, price has an aggressive move lower into that key level. Now, this is the type of scenario that I love to identify, where we have obviously a consolidation. Let's just identify Monday's range. We have a consolidation for Monday. Price then drops lower. And what is this? Accumulation on Monday, manipulation potentially on Tuesday, key level being hit. And then we have a impulse push higher, where now the market kind of gives us that displacement. And what's the key element here? That we have a bunch of liquidity that's resting. Look at the low resistance liquidity run signature here. There's not that much push and shove for the market to kind of reach up into this area, because on the drop lower and then the impulse push up, we've kind of cleared any significant areas in here. Price is back into that range. And then when we go on the 4-hour, this is my favorite confirmation, where we have a balanced price range forming. Price took out, again, the liquidity from Monday, and we have that aggressive move. And it occurred at a key time window as well, where we had this impulse push up, where price kind of like during the New York Open, price had that significant run higher. So when we have obviously an impulse that was created off of this level, we can then do two things. An aggressive entry would be the balanced price range in here. But again, typically if the market has a strong impulse, we want to be buying ideally during some sort of fair value. So when we use the range divider, the 50% was here, 75% of the range, or we could just simply put an OTE. And then we have all this liquidity that's resting above here. Notice, like, price, the real difficulty was the market trying to push above this bearish fair value gap, but we blew past it. And now we're kind of in a situation where if the market has a retracement down to here, or if it wants to seek lower prices, we're going to have a potential easy run to this liquidity pool, because there's a lot of resting liquidity, a lot of lower lows, and there's also a fair value gap that coincides with it. And when we go ahead and look at what price did, we came back into OTE, and right on the news event, what does price do? Beautiful run to clean the opposing end of the range. And I think it's just very important that when we identify these key scenarios, that we understand the market is seeking liquidity to the downside, but it's engineering liquidity so that way when it runs out, everyone who's going short, think of it from this lens, from a psychology perspective. Anyone who went short in this specific scenario is kind of in trouble, because now they kind of, like, let's just say they chased this potential short. Maybe some people took that retest short in here as well. And then when the market finally kind of has like that little bit of a double bottom, we're clearing out liquidity on the news event. And anyone who's like, had a trailing stop loss, trailing stop loss, trailing stop loss, price rebalances, and now the market swept the opposing end of the range. So again, guys, very simple concepts. Let me know if you guys want me to make these sort of style videos again. I really want to just kind of make everything as simple as possible. If there's any clarification you guys want, feel free to let me know in the comments section. And if you're not, again, make sure to join the public Telegram, as I do keep all updates in there. The PDFs will also be on the website, so make sure to check out that in the link in the description below. And until next time, I'll see you guys in the next video.